When it comes to capital raising, your second or third raise almost always feels harder than the first. And that actually surprises a lot of people. They assume that experience makes things easier. It's going to carry forward. You had a good pitch deck. You've got a good track record. You've got investors who've made money with you the first time round. So when the next raise suddenly feels slower, where investors are being more cautious, where everything's getting scrutinized more, it can feel really frustrating. And here's what's going on with that. You see, on your first raise, investors were in a completely different situation. It was a different time. And perhaps at the time, they were allocating money more aggressively. Maybe they had more money available. They had more liquidity. They were perhaps even like underexposed to that asset class initially. So they were more comfortable taking on that level of risk. That environment, the combination of all those things perhaps like really helped you. And because it worked the first time round, you naturally think the process will work again. But you see, when professional investors switch to being in that more cautious mindset, when they're protecting capital more so instead of deploying it, perhaps have made their big allocations already, they're working with less money now, your new offer might suddenly feel like a much heavier decision that they need to make. I guess the mistake that most sponsors make is that they assume that the environment hasn't changed, that time hasn't passed. So there's a way that you can really easily prepare for this. Like before you go back to market with a new offer, build your offer as if you're raising money from a really cautious investor. I mean, you could ask yourself simply, would this still feel solid to someone who's being super careful right now? That's it.